What does this look at? This is looking at credit spreads and risk spreads. What does that mean? This is what they're issuing the debt at. And your credit risk is your default risk. Because why is it called high yield or junk debt? Because it has very high rates of default. When the economy turns over, a lot of these companies go bankrupt. And the people that own their debt get wiped out, just like the equity holders. Well, as you saw in 2008, look what happened to credit spreads and junk debt. Jumped all the way almost up to 25% because of all the defaults. Now, if you go buy junk debt, and again, a lot of people don't even realize how much exposure they have because they're just putting money in their 401ks, you're buying junk debt with a yield of 4.31%. When you factor in inflation, you have a zero yield. And not only that, you're getting a zero yield and taking massive risk where you may lose 25, 30, 40, 50% of your investment. The markets are broken. So, what is the cost of all the sugar high? If you're, as I kind of alluded and talked about last year, when they pump money into a system, at the beginning it all feels good because it takes asset values and starts to rise asset values. And everybody likes seeing their stocks go up, their real estate go up, their bond holdings go up, everything starts to rise. But the problem is, once you pumped all that money into the system, it doesn't stop there. That money starts moving and circulating out of the capital markets as well. And now you're having to start, as years go on, deal with the consequence. And what are we dealing with now? Inflation. Inflation we really haven't had to deal with for 40 years. Inflation, folks, and I'll get into it, is a monetary issue. Because if you think of an economy as it becomes more productive and becomes smarter in how to operate, and technology advancements will always be deflationary. I'll give you the best example. Go back 100 years, and you owned a farm. How did you farm and produce your goods, your produce, whatever you were growing? With a horse or a cow and a lot of manual labor. Then what happened? Tractors came along. Then more modern agricultural practices, fertilizers. Now what one farmer can do and how much they can produce is unbelievable. That's all deflationary. That's what an economy, as it gets smarter and better productivity, will always create. Inflation is a monetary issue.